So a lot of stocks which are buzzing around today. In fact, let's address one of them. Nazara Technologies, they have bought an entertainment company, WildWorks, for around $10.4 million in the US. Nitish Mittersain, who is the joint MD of Nazara Tech, joins in on the show to discuss this particular acquisition. Nitish, hi, welcome to the show. So it is basically this particular company that you've acquired is US-based and it's focused within the child segment. Tell us more about it. What are the revenues of this company? Is it profit-making? When will it start adding to numbers for you?
Sure. So as you know, one of the important business verticals of Nazara is the gamified learning space, in which our flagship product has been Kidopia. And the target demographics for that product has been the 2 to 7-year-old kids, especially in the US market. So we've already been very active in the US children gamified learning space. And for the last year, we have been mentioning that we're looking for the right product that can kind of plug in the 8 to 12 segment or the next age group in that space. I think the company we bought now, WildWorks, Utah-based company, has a fantastic product called Animal Jam. The product has been around for many years. Over 150 million children have played this game over a period of time. So it's a very tried and tested product. Generates good revenues, 13.8 million in calendar year 21. It's been a profitable company with over $3 million of EBITDA. And I think the whole idea is that Nazara, using its knowledge base, learnings and experience in this space in the US market, we really believe we will be able to add value and boost this business going forward.
Okay, Nitish, hi, good afternoon. Talking from personal experience, having a 5-year-old who has used Kidopia a lot in the past, I must tell you, I'm sure this acquisition as well will do extremely well, given the way, kids are shaping up. They're so tech savvy, even at such a young age. But tell me about the scale up as far as WildWorks is concerned. Can you give us some numbers? I think you just shared a few numbers a while back, but what's the growth rate been like over the last few years? And what are the synergies for you?
So the revenues actually declined in the last year by 10 or 15%, primarily due to the Apple privacy issues that we've discussed many times earlier. But we see companies like this emerge out of that now. We are already seeing positive traction in Kidopia, and I think we will be able to scale up WildWorks. The good news is the LTV CAC equation, right, is more than 2 times. So for every, let's say, $100 we spend over a period of 24 months, we would earn more than $200 back. So it's a very healthy unit metrics on that business. And I think with our recent acquisition of DataWorks, which is an ad tech company, I think we will be able to power the user acquisition of this product much better. And I think that's the low-hanging fruit for us to kind of drive growth in this business. While we will also seek synergies, for example, between Kidopia and Animal Jam. Can we, once a kid completes playing Kidopia, the life cycle is over, can we upsell Animal Jam to them? These are the kind of ideas we will explore.
What my question was, how do you quantify these synergies, the cross-selling, upselling synergies, the cost synergies? Because the first half of this year, we've seen margins of 27% in WildWorks. So is that sustainable or not? And I remember you saying that you've increased prices by almost 15% in the first quarter. Now we have 2 months of data in the second quarter so far. Has that impacted customer acquisition, or customer acquisition is still steady? So to that extent, what is the kind of business outlook that you have here?
So on coming to specifically back to Kidopia, I think we are continuing to see healthy trends. I don't have specific updated data right now with me, but we did see that the price increase did not cause any negative impact. There was enough price elasticity, and we believe there is more price elasticity. So in the next few months, we can do additional price increases without impacting unit metrics or customer churn rate, etc. In terms of the WildWorks acquisition and margins, we usually discipline ourselves to, do acquisitions on a standalone basis. We want that the companies we acquire are able to perform on a standalone basis, and we kind of discount synergies between other products that we have. That said, we do think there are many synergies possible between Kidopia and WildWorks, and hopefully over the next few quarters, we will be able to demonstrate them.
Okay. Nitish, I have a different view that maybe once, now that school has started, COVID is pretty much behind us in terms of severe cases. Kids are not going to be able to use applications as much or technology as much as they used to. What is your sense, given the fact that there is possibly, and the trends are changing across the board when it comes to technology and what it was during COVID and now. So give us a sense in terms of where you see the revenues go on a quarterly basis when it comes to your gamified learning segment.
So if you look at our existing product, Kidopia, right, the daily usage is about 15 to 17 minutes per day. So it's not like we need kids to be staying at home for, and playing our products for, many hours per day. In fact, that's not healthy at all, and we would not recommend. So we have not seen any downturn because of, COVID getting over. Our conversion metrics are very healthy, in fact, improving. And I believe the digital lifestyle is here to stay. I don't think you can keep kids away from, digital devices anymore. You can moderate it, and you should moderate it, but you cannot keep them completely disconnected. So I think we plug in, with the gamified learning, we plug in a very healthy content that we are giving to young kids. They are getting the digital time, but parents are also happy that these young kids are absorbing content and learning it.
Nitish, I think, where Ekta is coming from is the fact that if you look at your own business, right, in gamified learning, the last 6 quarters, you've been struggling a bit as far as revenues are concerned. I think it was 50 crores 6 quarters ago, and it's about 52 crores now. So it's not that you've seen outsized growth in the last 6-7 quarters. What do you see as the way forward? Why have you been struggling in this business, and what could a sustainable growth be?
Sure. So that business got disrupted not because of COVID or because of parents not wanting their kids to play our apps. It got disrupted because of privacy policy changes done by Apple, which made it difficult for us to target the right audience. And I think we've been patient. We've not chased vanity metrics. I think we are very clear always that we will not chase vanity metrics. We could have spent much larger amounts of money, but we prefer to kind of earn better margins and reserve cash till we could solve this. But what we did in the last quarter is increase the price, test a price increase. That has helped us increase the lifetime value of a consumer over 24 months. And that now we can spend a little higher while maintaining healthy profit margins, which is why now we expect this business to grow. I think we are still scratching the surface in the US. There's a long way to go. And these businesses of ours, the gamified learning vertical, can become a much, much larger business than what it is today in the years to come.
All right, we take that point. In fact, Sonia, Ekta, you guys were talking about kids having screen time, etc. I don't have kids, but I'm sure that
you
parents
have screen time.
I have a lot more screen time than all these, people talk about and all of that and stuff. So I don't know. I think probably parents have to curtail their screen time before they pass that on to the kids. But be that as it may, Nitish, I wanted to speak about what accounts for my screen time, and that is a lot of esports. Over the last 3 quarters, you've seen the revenues, cross that 100 crore mark per quarter and sustain above that. Do you think this is the new normal, and what is the next milestone you're looking at out here? Say 150, 200 crores per quarter by when? And as you do that, your EBITDA also, it jumps substantially, right? Because of operating leverage. So what are we looking at there?
So I think esports as a trend, right, is having a very positive tailwind. This is an industry that is just emerging in our country, and the youth really enjoys spending time, I think, from a social entertainment category, right? If you ask a 12-year-old or a 14-year-old, they're spending more time watching people play games, watching people stream games on YouTube, Twitch, etc., rather than even watching cricket maybe. So I think esports is here to stay and become a very powerful sport in our country, the number 2 sport for sure in the next 2, 3, 4 years. So from that perspective, I think we're in a very space. We are the dominating player in this space. And as you can see, we are building a complete ecosystem around esports, and we're investing very heavily in it, which is why you see strong revenue growth. Not necessarily the EBITDA margins are, growing equally fast, but we are very happy with that because this is a time for us to build market leadership. As long as we are not burning cash, as long as we are not losing money, which we don't like to as Nazara, we are very happy with this, and we will continue to focus in the esports segment, especially. We will continue to focus on very fast growth while maintaining profitability, but not maximizing margins.
Just a quick last question then, give us some perspective in terms of your margins, because Q1 was a tough quarter on a year-on-year basis, at least for your margins, not so much for your revenue, and I'm assuming that's because of a lot of your acquisitions, but margins at 13.5% versus 23%. Tell us, what is it going to improve to? What is the range that we can expect?
I think the 23% you're referencing to, which was Q1 of the previous year, was a bit exaggerated because we had completely stopped spending on Kidopia at that point of time because we had just faced the disruption. I think we've maintained that we will maintain a 12 to 14% margin for this year as well. And we will relook at our margins maybe next year in terms of optimizing them. We can take many decisions today which can easily increase our margins overnight. Like I said, I think for a company like us in a fast-growing new media space, it would be a self-goal if we try and do that.
Okay, well, all the best. And we hope that, your latest acquisition will be as fruitful as the previous one. Kidopia did extremely well for you. Of course, gamified learning has slowed down a bit, but as you said, this is because of the privacy changes that came through from Apple.
He was talking about the opportunities out here and the kind of synergies, etc. The street's taking note of that. In fact, if you just pull up the intraday chart of Nazara, as Nitish was laying out the opportunities in Animal Jam, etc., the stocks rallied, taking note of all of that, up 6% as we speak. A big mover in trade.
And they also said that they can increase prices, right, in the quarters to come without impacting unit economics. So I think the street always likes that. Better operational performance. Okay, let's